Management with this week's Gradient Investment Market Update. All information is gathered as of October 14th, 2024. Let's get into the week in review. The S&P was up 1.13% last week and is now over 23% year to date. Growth stocks continue to lead the market. The Russell 1000 growth is up 26.1 year to date compared to the value, which is 1766. Even though there's growth, there's value, there's different types of growth stocks. Let's talk about bonds. We're slightly down last week as the Treasury rates rose for the week. The 10-year U.S. Treasury yield is now 4.08% from 3.81% at the end of September. The trend is a headwind for bond prices, so you're going to see a lot of that. You're going to see bond, the value grow, but certainly the rates are going down. Upcoming economic releases. The inflation report last week showed that the furthest slowing of headline CPI was up 2.4% year over year. The producer price index slowed further, coming in at 1.8% year over year. This week, retail sales data will be reported, and these will be watched for the state of the consumer spending. But because what does that do? It drives the market, right? Market outlook. Recent inflation data would suggest to us that we are closer to getting inflation under control, and even despite a strong report on the jobs, the Fed should be able to continue cutting at the next meeting. From a stock market perspective, earning reports will now take front and center as companies provide results, but also reflect on their outlooks for the remainder of the year. And we will be paying particular attention at the state of the consumer, both through financial companies, loans and credit card, as well as retailers. That's one thing we talk about all the time. It used to be a lot of cash on hand, when now there's a lot of credit card debt on hand. So that's going to come to a head. So you're going to see the spending and the credit card debt's getting so high, we're going to start to see that kind of get curbed. Recent activity in the graded portfolios, there really wasn't anything, no rebalances need to happen. Everything is still status quo there. Stocks in the news, JP Morgan, which is owned in the core selected G50, reported results that beat expectations on both sales and earnings, and CEO Jamie Dimon was positive on company results, but did express some concern that geopolitical risks are treacherous and getting worse, which of course is evident. On Tuesday, reports were circulated that the U.S. Department of Justice is considering a breakup of Google, owned in the core and G50, as a possible antitrust remedy for their search business. And any remedy for changes in business practices are far from decided, and court decisions and subsequent appeals may take years before changes happen. But there's a lot, they're coming down on business like crazy. They're trying to break up as much as they can. And there is sometimes that's a good thing if it's too much of that. But at the same token, they're getting in the way of free enterprise, which is not good. So some of there is antitrust we have to look at. Now, everything else, seems to be going pretty well. We're still seeing very positive earnings. We're seeing a lot of reports. We talked about some of the companies are reporting, and their earnings are still strong. Employment is still strong. We're probably going to see a quarter-point rate cut again, maybe a half, but I think a half would be a little bit too much based on what we're seeing, because there's still a lot of good signs, but they're not overwhelming. So we will keep you posted on that. Thank you so much for being part of our Vitale Wealth Management family. If you need anything, give us a call at 855-756-5700. Visit us at vitalewealth.com. God bless you. We'll see you again next week.